Good morning, everyone. Welcome to the Macro Snapshot. It is Friday, October the 31st, so the end of the week. Let's just have a look and see what's going on. 2025, of course. And it just reminds me that normally on a day like today, we would have a lot of data. The only thing we're getting is the private MNI Chicago PMIs, which will be kind of interesting. But if you look at all the other stuff, which has all been sort of shut down, we continue to have no data. And you think about it, no ISM. No, actually, we should be getting that because that's a private one. But if you look next week, ordinarily would be having the non-farm payrolls and whatnot. And so the point is that what does it mean in this data vacuum? It just means that certain sort of assets are able just to continue on their sort of merry way without any direction about the economy. So let's just have a look and see what's going on. And the point I'm trying to make is that once, when the US government comes back, we assume the US government will end the shutdown at some point. It's going to be a very binary situation. As I said, as I think I mentioned yesterday, that we could either have sort of, an unemployment rate which is going up, a labor market which is weak, an economy which is weakening, or it could be absolutely opposite, CPI, inflation sort of much higher, very strong employment market, strong general economy. And that's going to have huge implications for monetary policy. And that's why I think Powell at his press conference a couple of days ago really wanted just to sort of say to the market, hey, we're really operating in a foggy blindness at the moment, and we don't know what's going to happen. And so everything's becoming very binary. So with that in mind, let's just look at through a few markets. So what we can see overall, this is the daily charts here, by the way. We can see here that the treasury bonds or the treasuries in the US in general, both the front and the back end, are still trading pretty heavily. So you can see here the 2-year, this is on the futures, the ZT. You see that actually hasn't really bounced. It is getting to a pretty key level here. I think that's about 3.6 or so on the 2-year yield. So that's getting to a key level, and probably it doesn't really want to go too much lower than that, because that would start changing perceptions of the trough rate. So, like the terminal rate, and probably at this point, that's probably relatively acceptable. But it is interesting that the market has decided that it doesn't really want to bounce. And at this point, if we actually look at what's priced in for the next few meetings, which will just quickly go up here, just let me find that for you. Yeah. Okay, you can see here that now, instead of being a certainty for December, we only have 64% priced in. So we've got 16 basis points out of 25. So the market has gone from about, 95, almost like 100% chance of a cut in December, only to 64%. So it's taken out a good, sort of 9 basis points, 8 or 9 basis points, and it seems comfortable there. In terms of the terminal rate, if you actually look at the implied rate here going all the way into the 2027, it does seem that the lowest is, let's call it 2.97, let's call it about 3. So basically 3, that's where we're at the moment. And so that's implying, just another, sort of three cuts, 3.5 cuts, and it was up to 4.5. So that's going to be interesting to see how that develops over the next few weeks. Once we start getting data. So that's that. In terms of the long end, you could also see, if we look at ZB, which is equivalent of like 15 to 20 year sort of cash bonds, you can see that the ZB also, it is bouncing. There's a Fibonacci level here. You see from the Fib, just from this sort of most recent impulse here, it did get a bit of a bounce this morning from the Fibonacci level, but it's still trading fairly heavily, and could it be that, so like the 10-year yield, settles, into 4.1, 4.2, some people are even talking about, and a little bit higher on the 30 years. So just essentially saying, hey, the economy is doing okay. The employment situation. Powell himself told us that at 4.3%, it is low. Powell specifically said the unemployment rate is low, even though it's ticked up 1 or 2 tenths. So Powell's perception seems to be that, unemployment is stable. There's not a huge amount of demand for labor. There's also not a lot of people being fired. Although what for me is interesting is that we are starting to see little cracks. We saw UPS lay off a lot of people. Amazon's planned to lay off a lot of people. And this is not like 10 or 20 people. We're talking tens of thousands. So I'm just very curious to see where these unemployment numbers will be over the next few weeks once we start getting some data. Secondly, the government shutdown now is getting further and further along. I forget how many weeks, I think 6, 7, 8 weeks or something. And we're starting to get reports of, quite distressing reports that, people are having to use food banks and the SNAP SNAP, the SNAP kind of assistance with food. All of that money is running out. So we're starting to get a situation where a lot of government workers really have been without a paycheck for many, many, many weeks. And at a certain point, even at the margins, is going to start weighing on the US economy. As I say, this is probably a peripheral thing and a small factor at this point. But as it goes on, also sentiment, confidence, all of these things are going to start falling. And as I say, once we start getting data, will this be recommended? We also had from Chipotle, I'm not sure of the pronunciation, the Mexican grill restaurant on their call, I think it was yesterday, the CEO is essentially saying that they're seeing very, very weak sentiment. All the customers are spending a lot less money, and people in that cohort, in the 20s, are dining out a less. So talking about this K-shaped economy, it seems like the lower income earners are really starting to feel the pressure, and they're dining out a lot less, and that's been reflected in companies like Chipotle. So of course, we all know that the top 10 or 20% of the US in terms of income, they're spending about 50 to 60%. So the question really is, as long as the stock market is high, can this continue? So the markets is not the real economy necessarily. So just getting back to the 30-year here, or the ZB, what's interesting is that there's a few factors here. We had positive earnings. Keep in mind last night that we had, very, very good earnings, which beat all the metrics for Amazon. Apple was pretty good. There was some softness in China, but Tim Cook, the CEO, of course, on his call, mentioned the fact that with the new iPhone model, that's been very successful in China, and he anticipates a return to, really positive performance in China by Q1 of 2026. So even, the results in China were a little bit soft. Everything else was quite good, but Tim Cook actually being fairly upbeat about Chinese demand, especially for the iPhone going into next year. So especially Amazon, but also Apple doing quite well, and that was weighing a little bit here on the long-term bonds. Secondly, as well, we still have as I say, a bit of a hangover from the FOMC. And, if you look at the statement from the FOMC, keep in mind that they actually revised upwards. The language around the economy was actually a little more positive than the last statement, basically saying it was in some sort of, gradual expansion. The unemployment rate was reasonable. So at the end of the day, and inflation is sticky. So putting all this together, this is not a great combination for the long end of the bonds. And then finally, we also had the biggest investment grade issuance since 2023. We had from Meta, I think it was about $30 billion coming to market, investment grade, with tranches from the belly of the curve all the way out, I think to 40 years. So that's going to weigh on the investment grade market as on the treasury market as well, the long end treasury market. So a huge issuance from Meta. I guess all this capex has to be funded somehow. So all of these factors are making the long end trade fairly heavy, and overall the US Treasury space trading fairly heavily. As we just mentioned, if we go into the equities, not so much maybe the ES. I mean, it is still, trading very much at highs. And if we just throw on a few basic sort of moving averages, where are we? Let's find a few moving averages here. There we go. So putting on some EMAs, you see that this chart, this is zero technical damage. Like, for all of the talk of pullbacks and Trump and China and rare earths and everything, at the end of the day, apart from the Liberation Day nastiness in early April, I mean, look at these moving averages here. This is just like a smooth glide path up, especially if your time frame is medium to long term. Maybe not sort of people hitting zero DTEs, it's a bit bumpier. But for longer term, sort of investors, CTAs, all of these kind of funds, this is just a very smooth glide path upwards. Nasdaq actually doing even better. You see Nasdaq here pushing to sort of new highs, and probably today, I mean, why not? Maybe we're going to get sort of a fairly positive performance today, as I say, on the back of Amazon's strength and pretty good comments out of Apple as well. And then if you look yesterday, the only real problem, there's plenty of money being made, is just this capex thing. Meta seems to be creatively sort of funding that, with their debt issuance, whatnot. So at the end of the day, the tech space is still looking, pretty good. Looking onto some other things here, crude oil. What's going to be interesting, crude, is this some kind of bull flag? I don't know. Basically, it failed, as you can see here at the 100 and the 200-day EMAs, also at this sort of fib retracement here. There's a bit of a downtrend line here. So crude trading heavy. And what's probably going to be the next short-term catalyst for crude? We have the OPEC Plus meeting this weekend. There's been some rumors in the press about, maybe a small production hike. We shall see. I don't think the market's going to particularly like that. But at this point, I think we know the situation that Crude seems to be trading in this range in the mid 60s. This is WTI a little bit higher on Brent, obviously about $4 or $5 higher, just the spread there. So let's see what happens at the OPEC Plus meeting. If they do raise, it's meant to be pretty incremental. We're talking maybe 100,000 barrels a day, something like that. So I suppose if there's no production increase, that would be a sort of a bit of a positive for the market. And obviously, any sort of production hike which was greater than, let's say, 150, 200, 300, $400,000, the optics barrels per day, excuse me, the optics for that are not great. We might see another leg down for crude oil. A similar situation here for the gasoline, although it's trading a bit stronger, and nat gas. All of the energy is pretty much stuck in the range just at the moment. If we look here at the precious metals, gold, we mentioned yesterday the gold and silver both bouncing off some technical levels here, close to the 50-day EMA, but also the fib retracements here. I saw something this morning just doing some research that for the first time there's been some positive inflow into Western ETFs, so GLD, things like this. So maybe this sort of sell-off here scared, especially a lot of retail traders. It looks as though they're starting to dip their toe back in the waters. And so will those waters be calm or icy? We shall see. But the precious metals here moving up a little bit here. You see also the same thing with silver. On the other hand, copper, at least a high grade US COMEX traded contract, trading heavy again. It was rejected here. If you look here, just from a technical perspective here, you see this Fibonacci. So if we go all the way here, this fib couldn't get above the 50. So let's just clear that off. So rejected at the 50, also the recent highs here. Now what the bulls need to do, they've taken it here. If we just increase that a little bit, you can see here that what the bulls need to do is it's still a relatively positive. You look at the EMAs here, so it's relatively positive. It is sort of positively sloping in a subtle way. And this is interesting moment here because if you look at this most recent impulse up, sort of bouncing off the 61.8 fib. So far so good for the bulls. So there is some nervousness. If we put this impulse back here, you could argue that's the 50. So either bouncing off the 50% fib or the 61.8% fibs. But so far, copper hanging in there. Basically it was underwhelmed, the copper market, like most markets, by the Trump-Xi meeting. Also overnight in APEC, Trump has come back home for Halloween. But President Xi of China is still at the APEC meeting in I think it's in South Korea. In South Korea, there was bilateral talks with the Japanese Prime Minister. Also going to meet Carney of Canada, and the tone is sort of respectful and constructive. Xi was making a lot of comments. President Xi of China was making a lot of comments about keeping global supply chains smooth and open and dialogue and all that kind of stuff. So there is an amount of wariness and a bit of caution. And I think that's why for example, things like the copper market is still just keeping an eye on things because clearly there's been a change in the world order, and we see that in something like the currencies. If we look at the Australian dollar, not doing super well here, just a little bit of risk off here. We look at the New Zealand dollar as well. And that's also a function, talking about copper, that last night we also got, I forgot to mention it, the official PMI, so purchasing manufacturing for China. And that was a little bit lower than expected. We actually it came in at 49, and last time it was 49.8. So a small contraction there for the Chinese manufacturing PMIs. And that's not great for sentiment and indicating that the Chinese manufacturing sector is still, I'm not going to say it's going backwards, but it's not really expanding. And that's not good for the Aussie, not good for the New Zealand dollar. There's the Aussie. And again, things like copper also under pressure. Similar situation with the Canadian dollar. You can see this trading very, very weak. And although at the BOC meeting a couple of days ago, Governor Macklem essentially said that, maybe he's in a comfortable space, perhaps doesn't need to cut interest rates anymore. The reality is that the Canadian unemployment rate is over 7%, much worse than the US. There's still a lot of ongoing trade tensions and sort of a tariff war, shall we say, with the US. The US president is openly saying, giving contradictory signals. We had a nice chat with Mark Carney, but on the other hand, another 10% sort of tariffs. So, and the reality is that the Canadian economy, if you look at most metrics, is weakening, and that's reflected. There was an initial pop on that sort of semi, I don't want to say hawkish, but neutral comments from the Bank of Canada. But you see here that the Canadian dollar against the US on the futures here are falling. And, if you do any some kind of measured move, like let's say a Fibonacci extension or something like that, you could definitely see here that on the Canadian dollar, there is potential for more downside. So certainly a retest of, the 71.20 level is a possible, but even getting down into 70s, something like that is definitely a possible if it wants to extend a little bit lower. In terms of the dollar, well, just look at the Japanese yen here. Japanese yen kind of, weak, stabilizing. Last night we got the Tokyo CPI, which actually is an important number for the greater Tokyo megalopolis. That came in at 2.8, and that was above expectations. And keep in mind that last month we got 2.4. So the Tokyo CPI coming in higher than expected. Is this going to lead to a BOJ interest rate hike? Probably not anytime soon. We saw yesterday that Ueda was like, well, we need a bit more information. We need a bit more information. But let's keep in mind, I was just reading Bob Elliott this morning, as he points out, that the interest rate of the Bank of Japan overnight hasn't been greater than 1% for more than 30 years. 30 years. So Ueda is, constantly saying, oh, we need a bit more information. We're getting closer, just studying things. The new thing now is studying the Rengo negotiations, for the wages. And he said, we just want to see at least how they start. And of course, that's next spring, March, April. So I don't know. I mean, bulls in the Japanese yen are being constantly disappointed. And at this point, I mean, there's the chart, the Japanese yen on the futures here. This is not USD JPY on the futures. You can see here that it's broken some support here. Is this just going to be a little sort of poke downwards and like a false breakout, and it will sort of stabilize? Possibly, but in order for that to happen, we're going to have to get more information on data. And you see here the US dollar, like if we look at the dollar index, pushing above the 200-day moving average for the first time in a long time. In a long time. I mean, look at this. And if you look at the extended move here, the Fibonacci extension, you can see that this definitely has possibility to retest these highs and a key overhead kind of triple top coming upon us here at about 99.6, which is obviously close to the 100, sort of big, nice fat round number. So it looks as though the US dollar here, in the absence of any negative data, and that's what I was trying to say earlier, that in the absence of anything telling us that the US economy is weak, or that inflation is too sticky, or that the unemployment rate is getting too high, the US dollar is just drifting upwards. And if you look at the technicals here, this looks like a nice pullback, and it looks as though it's, definitely could push up to this level, as I say, about 99.5. And why not just run all the stops here and maybe push up into this complete and measured move, maybe even as far up as here, 100.8, this recent high up here. And that obviously is going to put a lot of downward pressure on everyone else. Okay, guys, I want to leave it at that today. As I say, we don't particularly have any data. We do have we do have the Chicago PMI coming out at 9:45, I believe, actually 9:42 for private subscribers. That's going to give us, some incremental information, I guess. That's going to be interesting. Of course, we do get some Fed speak. What's going to be interesting is that personally, what I'll be looking out for is Schmidt of the Kansas City. He actually, if you remember, on Wednesday was a dissenter, and he voted for no cut. Obviously, we had Mirren voting for 50 basis points cuts and the overall committee for 25. But Schmidt came out with no cut. So by far the most hawkish person on the committee. So I believe he's speaking today. That will be interesting just to see the justification. And again, if he continues to, present a plausible hawkish case, that could be a positive again for the US dollar and, keep the bonds trading a little on the heavy side. Also, it's going to be interesting to see what happens over the weekend with the OPEC Plus meeting. I'll be keeping an eye on that. Okay, have a great day, guys, a great trading day, and we'll continue this next week. Thank you.